Alright guys, welcome back. We're coming into 1 a.m., 2 hours before the London session opens. Next pair I trade besides US 30 is the GBP USD. Love the pair, very volatile. Something I want to help people to understand for myself as well is I'm looking at the monthly chart. What you want to find out is what is going on for the month. You can see that it clearly is in that it was in a downtrend. So you have a high, and then you have a lower low, right? And then you have a lower high. Then the lower low was broken. Then you have a lower high, and then this I can say it was broken because you have the wick, right? Okay, so we see that basically it is creating a series of low highs and low lows, signifying that we're in a downtrend. But really, I'm not saying anything as far as like we want to trade the monthly. We just want to find out what's going on. So from this, let's look at this perspective here. If I was to draw, let's say, a channel from wick to wick, what would I see here? I have the magnet on, so from this channel, let's just draw. I have no idea what this is. What's going on here? Hold on 1 second. Okay, let's try this again. I have no idea what's going on. This is crazy. Alright, let's just take off the magnet. Sorry about that. Sorry about that. We know TradingView can have a mind of its own sometimes. Okay, let's do this. Let's redo this. Let's be a little bit more accurate. We have from wick to wick. Okay, and then let's see where we are from here. No, what do we do there? Let's just do. Oh wow, there's something different going on here. All right. So from a monthly perspective, we see that we have been in a channel. You've been using my Fibonacci. If I was to go from the present high to the low, we've come up to a 50%. Let's just bring this right to the present high. We've come up to a 50%. And let's do our take profit level using my Fibonacci expansion from high to low, back into the high. We have a 127, 161.8. Let's see where we are. Interesting. So it looks like we could be coming back down on my 1027 rule method. We need to break above the 1 in order to continue into a buy situation. And right now I'm looking at a little bit of rejection. So let's just take off this here. And so we pretty much could still be in a selling situation. Let's see. Selling situation from wick to wick. We have some room down. We are above the 34 weighted moving average, and usually looks like we are in a buying situation. If I was to put my trend line from here to here, we have 1, 2, we have a third touch, so we may be coming down. So I'm looking at a target of 1.034026. So let's see. If I go down, this is a monthly, let's go down to the weekly and see what's going on here. I'm still like a top-down analysis, nothing in reference to my quarters theory and things of that nature at the moment, just if you don't have your charts really lined up. So we have 2 touches, we have a third touch coming up. We're at our 10 level. According to our Fibonacci, looking for some type of a retracement. We still are in a bullish trend, so to speak. We have created high highs and high lows. There's no break in structure. We go down to a daily time frame to see what's going on. Of course, we're still showing the high highs, high lows. We do see a nice pin bar kangaroo tail in this area, but I don't see the bulls coming in as of yet. Go down to the 4 hour. Let's see what has happened. We see that price is still above the 34 weighted EMA, but we have shown bullish bearish presence has now coming in. Now, just understand that bearish presence does not mean that they have taken control, but they have entered into the market. Understanding that each candle is a fight between the bears and the bulls. And so all along the way, we have seen a winning cycle of the bulls winning. A bullish cycle. And so now we're still in a bullish cycle, but we're seeing strong indication that the bears have come in. Let's see if the momentum still picks up. And what we want to look for is some type of push back up, some type of bullish push back up. If we make a higher high, if not, we'll see that the momentum is slowly starting to change. And again, what I'm looking for is 3 indications that the bears are in the market. Now wait for that selling indicator to come in. This is the 4-hour chart. Let's go down to the 1-hour chart and see what we see. Okay, so see, now we have created some nice bearish pressure here. We've broken the 34-week moving average. We do have some wicks here, so it's creating a level of support that has been created, and it seems like it can't push down any further, so we're probably going to get a push up, back up to this area here. And so sometimes maybe for the beginners, you may not understand what it is I'm talking about, what I'm doing, and so forth. But it's really basic market structure. It's price action. Prices telling you what's going on. So we have, from a 1-hour perspective, let's just get a little bit bigger here so you can see. And I recommend people do their own videos and talk out the process in their mind and also out loud verbally, so you can reinforce it in your mind and sound it down. So we have some nice pressure here, but we have some wick pressure, and so it has created a level of support, and it seems like the bears cannot seem to break it. We did see the bulls come back in, but that's not a strong indication, but they have entered into the market. So understand that now that they are into the market, so you have the bears and the bulls in the market, and now it's just a matter of a decision as to which direction price is going to go. So we have the indication that we are up under the 34 EMA, so we may see some bearish pressure. We may break this level of support and continue down, and we could see some bullish pressure. Right now, although I see presence of the bears here, I only have one market pattern here, one reversal pattern, so it's indication that most likely it may continue downward. But I don't know that as of yet, because now we're still in a matter of sitting at support. I need to see some type of indication whether who's going to be stronger, the bears or the bulls. This is where the waiting game comes in at. It's 1:10 a.m. Eastern Standard Time. London opens in about 2 hours or so. So at that point, we'll start to see what the market is going to do, if it's going to continue down or it's going to push back up and break this previous high and continue upwards. But what is the sentiment? What I want to talk to you about is, what is the sentiment from a monthly perspective? From a Fibonacci perspective, when you have a strong push downwards here, like I see, from the high to the low, and you have a retracement that goes to a 50%. A 50% retracement, just for a little nugget for you guys, is usually going to return to a 61.8. Let me see if I can just move this down. There it is. Let's move this down some. Okay, I can move that up. So what I'm thinking is going to happen is that price is going to fall from this level here, and it's going to come down to the 0.73960 area because this 50 retracement here, it hasn't even hit the 127, which is the minimum retracement expansion level of any retracement that we see using the Fibonacci tool. So we have at least take profit one of 1.03406, and then a target of 0.73960. So really, we're looking at my bias for GU is a strong bearish sentiment. If we do break above this trend line here, then most likely we will continue seeing some bullish sentiment. But right now, as you can see, we are in a downtrend, and this is a monthly time frame, which is the strongest time frame that we can see in our charts. So just keep that in mind as you go forward in trading GBP. So GBP, AUD, GBP, USD, GBP, JPY, understand that the sentiment should be bearish. Hope this video gave you some nuggets, gave you a different way of trading, just a different sentiment, a different bias. And let's just see what happens in reference to what price does in reference to GBP USD. Okay? And until next time, deuces. I'll see you in the next video.